Just last October, Chinese government actually mentioned about a tremendous stimulus that they're going to inject into their economies. It's going to be so big, so unprecedented that it even caught the attention of some noticeable investors. This is David Tepper. And once he realized how serious the China stimulus are, he decided to invest into China. He bought JD, he bought Alibaba, and China exposure is now more than a third of his portfolio. He's even went on media to suggest how confident he is that that will be the start of the new China bull. Then what happened? Retail investors caught wind of it, correct? And Chinese stock market started to rally. Hang Seng Index went on a hockey stick up for 30%. But just when all the optimism started to come in, markets did a reversal. They always say retail investors are the last to join the party, correct? The last one to hold the baby over there. And what we can see in October is that the market started to come down. Chinese retail investors who went to bet all in, get greedy on the situation, thinking that it's going to be fast profits, all started to lose money.
股市今天大跌，坚决看多中国股市的我跟很多乐观的分享者肯定是免不了被骂了。很多人问我调整什么时候结束，我不知道。分析的人包括我现在压力都非常大。
And as we know, Chinese social media is also very extreme and very sensationalized. There were some influencers even that proclaimed that the Chinese stock market was going to the moon.
公开预测股市国庆后会暴涨，如果预测错，我直播吃。
And indeed, some followers started to invest aggressively. And maybe to market makers, that was the best time to fade the rally, correct? Because what we can see, unlike the US markets who have consistently rebounded from corrections, the Chinese market has burnt many investors in the last few years. It is the prime example of this psychology of market cycle curve, which means back in 2021, they were on a hype train up. Alibaba, Tencent were going to be biggest companies in the world, so on and so forth. And then it became a big crash whereby Chinese CCP was just the sole reason as to why you can never make monies on the China market. 3-4 years have passed since then, and that narrative is now embedded very deeply to all global investors. No one likes to feel foolish. No one likes to own Alibaba when Apple is going up to the moon. And when more and more people start to leave the China scene for US scene, that narrative just builds momentum, correct? And that's how that China is uninvestable started to come out in the market. Is that term yesterday's news already or not? So expectedly or unexpectedly, Chinese stock market started to come down or just consolidate for the next few months ahead. Nowadays, investors are so impatient to make money. Just to wait from October to February, that'll be too long a wait. We're missing out on too much. But for those who have left, little did they realize that there'll be a new good news that might propel Chinese stock markets back to its highs. And the seeds of it could be with DeepSeek.
A new investment thesis is emerging after DeepSeek use. People are becoming aware that basically China is eating the world, outcompeting everyone else, possibly posing existential threats to Western businesses. At some point, that knowledge has to be baked in asset prices.
DeepSeek itself could be the new shining light as to why China's economy has hope yet again, or to be specifically Chinese tech. DeepSeek has fueled patriotic bets on Chinese AI stocks, and for anyone who doesn't know, China actually leads many innovation metrics, and China actually leads US in technology patents. US once led in 2003 to 2007, but right now, China is a leading country in 57 of the 56 technologies over the last 5 years. China also leads in solar panels, and China also leads in electric vehicles. It is little wonder actually that AI would be something that they are pretty good at, which is also why Deutsche Bank has mentioned that China eats the world as DeepSeek shows its strength in high-value sectors. Deutsche Bank has also mentioned that investors will soon flood into Chinese stocks soon. Is it just Deutsche Bank? Absolutely not. China tops hedge funds shopping list so far in 2025. That's by Goldman Sachs. And the lure of artificial intelligence development in China has accelerated the buying of investors. What about Bank of America? They have also mentioned that US stock market outperformance may be fading already. Magnificent Seven's slowing growth is threatening the S&P 500 rally. And they have noticed that equity markets in Brazil, Germany, UK, Canada and China have yielded better returns than S&P 500 year to date. Bank of America has recommended Chinese equities as they are not expecting an escalation of trade and technology war with US. Now coming to here, if you have learned something already, smash the like button and press on subscribe, especially when you get notified of where better to invest for yourself. Because coming up next, I'll show you some investment ideas. But again, as always, not investment advice. These are some of my findings and hopefully I present to you interesting ideas that you can research further for yourself. I would think that if this market rally is led by AI, then quite likely Hang Seng Tech would be a good place to allocate some equity investments. Hang Seng Tech has been beaten down since 2021, correct? And we've all heard of the story of Alibaba and Tencent getting whacked by CCP, and this underperformance over the last 5 years is 30+%. I always tell private clients, it's not 30% decline that hurts. It's 30% over 5 years. No rebound that really makes people disappointed. But all good things come to an end, so does all bad things. And if you were to look exactly at Hang Seng Tech, whereby you can invest in it through HST ETF listed in Singapore, that's the LAN OCBC Hang Seng Tech ETF, you would realize that things are turning bullish. Back in October when markets rallied, the 50-day moving average cut through the 200-day moving average and things started to trend up. This last few months of consolidation actually gives a good basis, a good foundation level for markets to push higher, at least in my opinion. Markets are retesting back the October highs for Hang Seng Tech, and the weak hands may have given up already. But when I say so, do know also, markets are very tricky. I drew over there a brown line to suggest that after this short AI rally up, there could be a month or two of flattening yet again. But I think the odds are very good that it shoots up at some point in the green line that I'm describing over there. Underlying the Hang Seng Tech Index are blue chip companies that are doing very well. I happen to have covered them before in this channel. Xiaomi for one is at all-time high already. You see this chart? It's a massive re-rating upwards that is supported by strong fundamentals. What about for Tencent? They have also shown growth quarter on quarter. I've also embedded to some of my private clients' portfolios, and I think things are looking good for it. Tencent is something that I own personally for myself. As you can see, I've been consistently accumulating it and being very patient. Right now, it's finally bearing fruits. And in a subsequent episode, I'll be sharing with you where it sits in my portfolio. So if you're curious, again, smash on the subscribe button. The one that's capturing everybody's imagination right now is Alibaba. Breaking news, Apple will be working with Alibaba to develop AI features for iPhone in China. But the main catalyst for Alibaba right now is its large language model, which is developed by Alibaba Cloud. And that may be a blueprint on how to get a re-rating for Chinese stocks. As you can see, the moment they've released that news, share price of Alibaba surged up by 27%. In the latest earnings call, CFO has even continued to hype it up, saying the AI-related product revenue sustained triple-digit growth for 6 consecutive quarters. While hearing this, nobody is even paying attention to the revenue growth, even though that is the key contributor to Alibaba shares recovering right now. Again, this is such a fantastic blueprint to get re-rating on the company stock. I'm fully expecting other Chinese tech firms to do the same. We really don't know what Tencent and Baidu are holding in their AI portfolio. And we flow back to our psychology of market cycle. After a disbelief phase, where many investors have yet defined it as a sucker's rally, and that China is uninvestable, a new high will bring real hope. The big boys, as what I've shared with you, are really starting to sound optimistic about China already. And once the share price starts to run, more news will be fed to you that China indeed is undervalued and that the worst could be over. Let me know in the comment sections whether you agree or not. And as always, check out this previous video I had on 3 companies that have shown very good results, and they include Xiaomi and Tencent. Follow on to the tutorial and I'll see you there. Take care as always, invest safely, goodbye.